For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry. Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Today, our topic is passive investing with Shariah compliant ETF. So what exactly is ETF? Now, ETF stands for Exchange Traded Funds. So it's like a fund that is traded on an exchange that can give you diversified exposure to the assets that are in the fund. So if you want to learn how to have passive income through Shariah compliant exchange traded funds, this is a session for you to learn so. So before we begin, let me introduce myself. My name is Shen Chu. I'm the moderator for this session. So the disclaimer for this webinar is that whatever we share in this session is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. So allow me to briefly introduce our guest speaker today. And he is none other than Mr. Zulkifli Zulkifli. Now, Zu is a licensed financial planner with expanded scope. He is currently practicing in a Wealth Vantage Advisory Services in Berhad, a financial firm licensed by Securities Commission and Bank Negara Malaysia. His expertise is in holistic financial planning and advising on equities, debentures, or warrants listed on Bursa securities. Now, Zu truly believes that a simple and personalized investment plan is vital to growing your financial assets. And today, we are very honored to have you here to share with us about Shariah compliant exchange traded funds, how we can do passive investing with it. So without further ado, let me hand over the session to you, Zu.
All right, thank you, Shane. First of all, I'd like to thank Bursa Malaysia for giving me the opportunity to give a sharing tonight, and also LifeChamp for giving us a platform today. So let me share the screen first. Okay. All right. You can see the screen now, right?
Yes.
Okay, all right. Okay. Let me start. All right. Okay. Now, before we go further, I would like to inform all of you that the Shariah compliant ETF is not a product that is exclusively for Muslim only, but it open to all regardless of their belief. Okay. If I remember back in 2019, I attended an international investment conference, and the investment team was all about Shariah compliant. So one of the participants is an experienced lady. So I call him as an experienced lady lah. After the conference, she approached me and asked a question, probably a randomly selected. I was having a chit chat with my colleagues there and wearing a suit. So she approached me. She said, young man, I would like to know whether I'm able to invest in this Shariah product as I'm a non-Muslim. But I do like the criteria used in the selection method as it does align with my moral belief. So I answered her that when it comes to Shariah compliant investment, everyone can invest in it. Okay, so yeah, you can also invest. And in fact, we do welcome everyone to invest in any Shariah compliant product that is available in the market. Okay, the reason why I said so, because when there is more demand, there will be more supply in the future. So hopefully, more participants in this Shariah compliant products, there will be more product features that will be available in the market in the future. Okay. Okay, so come back to our topic tonight. It is about one of the capital markets product known as exchange traded fund. Okay. Now, when it comes to the definition as given by the Security Commission Malaysia SC, ETF is defined as a listed index tracking fund. So this fund is structured as a unit trust scheme. And the objective of this fund is to achieve the return that correspond to the performance of a particular index. Okay, that's the objective. So even though ETF is a unit trust, it is not like a traditional unit trust. Okay, it is also traded on a stock exchange. Meaning to say that if you have a trading account with any broker, you will be able to buy it in Bursa as you are buying any securities there. So ETF is passively managed, and the objective is to mirror, okay, the performance of its benchmark, and in this case, a particular market index. So every fund has their own benchmark that they try to mirror. So once the manager identify a particular market index, they will then decide whether to invest in all the constituent securities in that index. We call it as a full replication, or invest in a partial only. Okay. Now, we're going to spend a lot of time today in this slide, because before we jump into Shariah compliant ETF, so let's have a understanding on the basic structure of an ETF first. Okay. So as you can see from the diagram here, there are many parties involved. Okay, we have first we have a manager or a management company, a trustee, participating dealers, liquidity providers, and others. So rest assured, we are going to go through them one by one. But for tonight, it will be at a high level only. Okay, otherwise, we need to have a dedicated workshop lah if we want to go a little bit further on any of this structure. Okay, now first is the manager. So the manager of an ETF is of course lah to manage and administer the fund in a proper, diligent, and efficient manner. Okay, the manager in this case must be approved by the Security Commission under Securities Commission Act 1993. This management company is also responsible to ensure that fund or the units of the funds are correctly valued. Okay. Second, other than the manager, the fund also need to have a trustee. Okay. This trustee will be appointed by the manager to act as the custodian of the fund asset. Okay. The trustee also will safeguard the interest of unit holders by actively monitoring the administration of the fund by the manager. Okay, this appointed trustee must also get an approval by the AC. Okay, so for the trustee, it has a fiduciary duty and remain objective and independent. Okay, therefore, the trustee must also conduct independent reviews and exercise a reasonable diligence in monitoring the function of the management company of the fund. Okay, should there any irregularities, any breach of the provision of the trust deed, guideline, or securities law involved, the trustee must immediately notify the Security Commission. Okay, another party that is also important, but unfortunately it's not available in the diagram shown, is the investment committee. Okay, this committee is responsible in overseeing the investment decision proposed or made by the manager. Okay, so the management of company can propose, but there must be some one committee lah to review everything. So if refer to the guideline on ETF by the AC, the investment committee must consist of 3 members who are individuals, and this committee must act separately and independently for the fund that is appointed for. Okay, and this committee must also get approval from the AC. So we have the management company must get the approval from AC. The trustee also need approval from AC, and also the investment committee. Okay. Now, when it comes to participating dealers, so the participating dealers in this case must be appointed by the management company. So their roles are responsible for the creation and redemption of ETF units. So they can play 2 roles at the same time, either as a principal of the fund or on behalf of clients. Okay, so whenever investor requests for creation or redemption, the participating dealers will apply to the management company for the creation or redemption of ETF units. Okay, participating dealers also can undertake the role of market makers. So they also can become a market makers. So in this case, in the diagram, we can say that is as the liquidity providers. So these liquidity providers or market makers are required to maintain continuous bid and ask quote. Okay, whenever you want to trade, you need to have a bid price and also ask price. Okay, same as when you go to buy any security or stocks. Okay, so a market maker must be ready to buy from sellers and also ready to sell to buyers. Okay, the existence of these market makers is important in the secondary market, which involve us as a retail investor. So because they provide liquidity in the market, and this contribute to the long-term growth of the market. So the main structure here, most of the structure, including manager, trustee, investment committee, participating dealers, and liquidity providers, okay, are quite related with the institutional investor. So the function of the presence of these market makers will also provide liquidity for the secondary market, which is involve us as the retail investor. Okay. The other one is the number 5 is that it related with the in-kind creation. Okay, let's talk about this in-kind creation and also redemption of ETF units. So ETF units is done in large multiples. For example, in 50,000 unit, 100,000 or 500,000 units. Okay, because of this size and large securities component, the in-kind mechanism naturally restrict participation of retail investor. Okay, and most likely the institutional investor involved. Like I mentioned before, the main structure normally because of the in-kind redemption and also creation, most probably we are unable to participate directly lah. Okay, for retail investor like us that will do transaction in less amount. Okay. We need to purchase them from the secondary market, which is in bursa or stock exchange lah in this diagram. So the creation of units, okay, this is the process of creation of unit. Okay, the creation of units begins when a participating dealers assemble a bucket of securities known as an index basket, and then they will deposit it with the trustee via the management company. Okay, this index basket is determined by the management company on daily basis. Okay, so once upon receiving this deposit from the participating dealers, the trustee will then create a specified number of new ETF units known as a creation units and forward them to the participating dealer. So you deposit a basket of security, I give you a creation, unit creation. So this creation are determined by the management company after consulting with the trustee. So when the participating dealer receive the ETF units, they are free to hold or sell them on the secondary market through stock exchange. So in Malaysia, it is traded on bursa in the same manner as stocks. So the price of ETF is subjected to the force of market demand and supply. When redeeming the ETF units, just now is about creation. Now redeeming ETF units, the participation dealer presents the specified number as a redemption unit to the trustee. So in return, the participating dealer will get back a basket of securities, which is equivalent value to the redeemed ETF units. So then the basket of securities can also be sold on the secondary market. So the participating dealer, in terms of interaction with us as a retail investor in the secondary market, either we buy ETF units from them, or sometimes we probably buy the security that after they redeem from the trustee in the stock exchange. So the process of creation and redemption in kind usually will not involve retail investor, like all of us tonight lah. So okay, so where do we take part in this structure? So like I mentioned earlier, remember the market maker, one of the function is to become the liquidity provider. So retail investor involvement is normally with this market maker lah. Okay, the market maker determines the bid and ask price. So this bid and ask price reflect the net asset value, NAV, where the bid price is spread below the NAV and the ask price is a spread above NAV. Okay, so whenever you want to sell the unit, you need to refer the bid price, and whenever you want to buy the unit, you need to refer to the ask price. So retail investor we use as price. Okay, you want to buy the unit, can. Like I mentioned earlier, when you want to sell it back, again, you need to refer the bid unit lah, right? Okay, now we move to the next slide. Okay, now this is the basic structure of a Shariah compliant ETF, known as IETF in Bursa. So Shariah compliant is ETF is IETF lah in Bursa. So basically from here, we can see that the structure is similar with the normal ETF. But for IETF, a Shariah advisor must be appointed by the management company to advise on all Shariah matters in relation to an Islamic ETF. Okay, in general, Shariah advisor must either be an individual or a corporation, and must registered with the Security Commission Malaysia, either as a licensed Islamic bank or a licensed bank or licensed investment bank approved to carry on Islamic banking business. Say, for example, where individuals are appointed as Shariah advisor, they must comprise at least 3 individuals to form a Shariah committee. So the Shariah advisor appointed must be independent from the management company. Okay. So the Shariah advisor appointed must also carry out the following roles and responsibility lah. Okay. Number 1 is that they need to provide Shariah expertise and advice on Shariah matters in relation to an Islamic ETF. Okay, this include matters relating to documentation, structure, feature, investment instruments, and ensuring that all aspects of the Islamic ETF are aligned with Sharia requirements. Okay, they also need to ensure that Islamic ETF complies with the applicable Sharia rulings, principles, and concept endorsed by the Sharia Advisory Council, SAC. Other than that, they also need to review the ETF compliant report and investment transaction report. Okay, every time the management company do any transaction, either redemption or creation, and this report also include the compliance report provided by the compliant officer. So the Sharia advisor also need to go through all of these documents, and Sharia advisor also need to prepare a report to be included in the annual report stating their opinions whether this Islamic ETF has been managed in according to Sharia rulings. Okay, sometimes they have to apply ijtihad lah, or we call it as a intellectual reasoning, to ensure all aspects related to Islamic ETF are in compliance with Sharia. Let's say if there is in the absence of any rulings endorsed by the by the Sharia Advisory Council. So that's when this situation happen, then they have to apply their ijtihad lah, or intellectual reasoning. Okay. Another add point I would like to say is that there is also a specific roles lah and responsibility of Sharia advisor for Islamic ETF, which ETF that based on gold and silver. Okay, in this case, Sharia advisor appointed must conduct at least an annual audit, including site visit to the place where the gold and silver bullions or bars are kept. This is true because I've known one of the Sharia advisor. She said that occasionally she need to go abroad because she need to do some audit relating with Sharia product, and also one of the our ETF. She need to fly to Singapore to do that. So this is important. Okay, the reason why they need to do that because they want to confirm that the gold and silver bullions or bar are in existence. Okay, and the quantity including the record of its movement and the bars are kept in a segregated and allocated manner. Okay, where the ETF is expressed to be managed and administered in accordance with Shariah principle. The index used also as the benchmark must be Shariah index consisting of Shariah compliant security. So after this, we will learn what Shariah screening methodology used to classify whether the securities is Shariah compliant or not. Now, when it comes to Shariah screening methodology, there are two types of screening being used. Number one is the quantitative screening. Second is the qualitative screening. Okay, for the quantitative screening, there are two levels involved. Level one is for the business activity screening. Okay, for the business activity screening, the contribution of Shariah non-compliant activities to the overall revenue or profit after tax of the company will be compared against relevant business activity benchmark as follow. Okay, the first is the first benchmark that they use is that 5% benchmark. Okay, this is applicable to the following activities lah in the table. So you can see that activities related with conventional banking and lending, conventional insurance, gambling, liquor and liquor related activities, pork and pork related activities, non-halal food and beverages, Shariah non-compliant entertainment, tobacco and tobacco related activities, interest come from conventional accounts and instrument, dividend from Shariah non-compliant investment, and other activities deemed non-compliant according to the Shariah principle as determined by the Shariah Advisory Council. Okay, for this kind of activities, the contribution of Shariah non-compliant to the group revenue or profit after tax of the company must be less than 5%. Okay, second benchmark is the 20% benchmark. Okay, this benchmark is applicable for the following activities. Okay, activities including things like share trading, stock broking business, rental received from Shariah non-compliant activities, and other activities deemed non-compliant according to Shariah principle by the determined by the Shariah Advisory Council. So the contribution of Shariah non-compliant activities, these kind of activities, to the group revenue or profit after tax must also be less than 20%. Okay, now we finish the first level. Okay, now is the level 2. Okay, the level 2 relates with the financial ratio benchmark screening. Okay, for this ratio, the SAC consider the following. Number one, the cash over total asset. Okay, so the cash only includes cash placed in conventional accounts and instruments, whereas cash placed in Islamic accounts and instruments is excluded from the calculation. The second financial ratio that taken into account is that debt over total asset. So debt only includes interest-bearing debt, whereas Islamic financing or sukuk is excluded from the calculation. Sukuk is the Islamic bond lah, right? So for each ratio, is the reason why is that it is intended to measure riba and riba-based elements within a company's statement of financial position, or the old terminology that we understand is the balance sheet lah of the company. And in this case, it must be less than 33%, right? And last for the level 3, so once you pass the level 1, level 2, and then for level 3, which is the qualitative screening lah. Okay, the security, the Shariah Advisory Council (SAC) also consider the aspect which involve public perception or image of the company and of the company activities from the perspective of Islamic teaching. So we have 3 levels lah. Okay, level 1, level 2, and also level 3. So level 1 and level 2 related with quantitative screening. Level 3 related with qualitative screening. Okay. So this is a list of IETF currently available in Malaysia. So currently there are 6 IETF, Islamic Shariah compliant ETF, available for us as a retail investor in Malaysia. So 5 out of 6 are equity based. Only 1 ETF focus on commodity, which is gold lah. Okay, as of now, we don't have Islamic or Shariah compliant ETF that focus on fixed income. Before this, we used to have we used to have 1 ETF focused on agriculture, but it's no longer available in Bursa. So the first IETF is my ETF Dow Jones Islamic Market Malaysia Titans 25. Okay, followed by my ETF MSCI Malaysian Islamic Dividend. Okay, these 2 IETF exposure is in Malaysian market. So the third IETF is my ETF MSCI Southeast Asia Islamic Dividend, which is focused on Southeast Asia region, followed by my ETF Dow Jones US Titans 50, which focus on US market. Then we have IETF focus on gold commodity, followed by the newest edition of IETF, which focus on China. So tonight, we are going to go through them one by one to understand each objective, strategy adopted, and also its exposure to different market sectors and geographical element as well. Now, this is the latest fact sheet that I download from the management company website. Okay, the first is the my ETF Dow Jones Islamic Market Malaysia Titans 25. So this is the first IETF available in Shariah in Bursa. So the first Shariah compliant ETF is this one. Okay, it was launched in 2008. So the manager is IVCAP Management Sdn Bhd. Remember, we just now we studied about the management company. So in this case, it's IVCAP Management Sdn Bhd. Okay, and the fund objective is to track the benchmark of Dow Jones Islamic Market Titans 25 index. Okay, so this index consists of 25 largest Shariah compliant securities of companies listed in Bursa. So you can expect the constituents will consist of large cap, probably with market cap 2 billion and above. Okay, from the top 10 holdings, let me show it. Okay, all right, here. So from the top 10 holdings, we are quite familiar with the securities and their businesses. Okay, for example, you can see that there's a Macy's Berhad, DG.com Berhad, something related with telecommunication. I'm sure many of us are user of these 2 companies. And Sandabi Plantation, KL Kepong, II Corporation normally involved in plantation, IHH healthcare industry, what else? Petronas Gas, okay, energy, and also Petronas Chemical lah, okay, and also Dialog Group Berhad involved in also in oil and gas or energy sector, okay. So from here, we can understand most of them has already reached a mature stage in terms of business cycle. So due to this nature, the growth will be slightly lower. Therefore, the surplus of profit will be distributed as dividend to the shareholders, and the percentage of dividend yield will be higher compared to a growth company. So in terms of sector allocation, in my opinion, for this ETF, I would say it's quite balanced and concentrate on defensive sectors such as utilities, consumer products and services, and also healthcare. So since it's focused on large cap, there is also a presence of concentration risk. Okay, based on the nature of this fund, you can expect to gain return through capital gain and cash flow via income distribution. In this case, the income distribution is semi-annual and subjected to discretion of the manager, right? Okay. Second is the My ETF MSCI Malaysia Islamic Dividend. Okay, it was launched in 2014. So the manager or the management company is also the same, which is IVCAP Management Sdn Bhd. And the fund objective is to track the benchmark of MSCI Malaysia IMI Islamic High Dividend Yield 10/40 Index. It's quite long. Okay, now this index will reflect the performance of the large, mid, and also small cap equities. Previously, I think is focused more on 35 largest cap. This ETF have a broader exposure lah. They have a constituent of large, mid, and also small cap equities. Okay, in terms of market capitalization. Other than this broad exposure, is also focused on Shariah compliant equities with higher than average dividend yields. Okay, this is just an example. For example, if the average dividend yield is 3 to 4%, any Shariah compliance that equities that can produce more than that will be listed as the candidate, and further details will be done by the investment committee of the management company to ensure that it is also can be sustainable lah. Okay, this is just an example lah. All right. So from the fact sheet, you can see the top 10 holdings. We can see some of similarity in terms of the securities and their businesses with the first ETF lah. Okay, but unfortunately, we can't see any mid-cap equities in the top 10 holdings. But we just need to dig further in the fund annual report lah for the mid and small cap equities involved. Okay. Based on these top 10 holdings, you can see that there's quite a difference. Some of them like QL Resources is business company involved in poultry businesses. Scientech by Heart involved in packaging and packaging materials. Other than that, it will be quite similar lah to the first ETF. Okay. In terms of sector allocation, I would say is quite heavy on plantation and consumers, products and services. So the plantation sector will be more cyclical in nature, whereas the consumers can be both lah, either cyclical and non-cyclical. And this ETF also, the sector also supported by defensive sector in utilities lah. So based on the nature of this fund, you can also expect to gain a return through capital gain and cash flow via income distribution. But I think it emphasized more on the cash flow part. So I would say it is more inclined towards an income portfolio. So the income distribution is annually and subjected to discretion of the manager. Okay, the third IETF is My ETF MSCI South Asia Islamic Dividend. Okay, it was launched in 2015. Yeah, the manager is also the same, which is IVCAP Management Sdn Bhd. And the fund objective is to track the benchmark of MSCI Asian IMI Islamic High Dividend Yield 10/40 Index. It's quite long also. Okay, the fund objective is to get the dividend yield opportunity within Southeast Asia. Okay. Now the reference index will reflect the performance up to 34 Shariah compliant companies listed on the stock exchange in Southeast Asia across 4 emerging markets countries and 1 developed market country. In this case, the developed market country referring to Singapore. Okay, this benchmark index is targeting those equities with dividend yields that are at least 30% higher than those constituents in the parent index. If you go and search on the parent index, I think the constituents is almost 400 something. But in this case, this particular fund, they have so-called of derivation of index. They focus on 34 Shariah compliance company across the Southeast Asia regions. Okay, from the top 10 holdings here, we can see that most of the companies come from Malaysia and Thailand, followed by Indonesia. So the biggest allocation will come from a defensive sector, which is consumer staples. So meaning that it leaning toward non-cyclical stocks. Okay, based on the nature of this fund, you can also expect to gain return through capital gain and cash flow through income distribution. But I think it's also emphasized more on the cash flow part. Okay, again, I would say that it's more inclined towards income portfolio. And also the income distribution is annually, same like the previous dividend target local IETF, and also is subjected to discretion of the manager. Okay, the final IETF from the same management company, which is IBK Management Sdn, is my ETF Dow Jones US Titans 50. It was launched in 2018, and the fund objective is to track the performance of 51 largest Shariah compliant company listed in US and the benchmark used is based on benchmark index that maintained and published by S&P Dow Jones indices. Okay, for this IETF, Shariah compliant ETF, this one is quite special. The base currency used is in US dollar instead of Malaysian ringgit. Meaning to say that before you can purchase this IETF, you must check with your broker whether the platform provided will be able to support in terms of currency conversion. Okay. Otherwise, you won't be able to conduct any transaction. This is rule based on my experience before. I opened a couple trading account with our local broker. I was thinking to get a better brokerage rate with one of the broker. And when I asked whether I can buy this kind of ETF, unfortunately the broker cannot do so because they don't have any facility to do currency conversion, and because of that, I can't get to buy this kind of ETF lah. Okay, so if you're interested to buy this ETF, since that is the base currency is US dollar, you must make sure check again with your broker whether they can support this currency conversion. Okay, based on the top 10 holdings here, we can see it is dominated by technology stock. So most of them are known to us as a user of their product. Okay, and it is confirmed by referring to the sector allocation, which is heavy towards information technology. Okay, you can see that the top 10 holdings, something like Apple, Nvidia Corporation, okay, Tesla, something like that. Okay, so most of them are inclined towards technology stock. Okay, so based on the nature of this fund, you must be aware that they are risk associated related to currency risk, because since that we need to have a currency conversion when we buy this kind of ETF, and it's traded in US dollar. And the concentration risk also available for this kind of product, not in terms of market cap, but the concentration risk also relate with the technology sector. Okay, so technology sector is considered as a growth sector, which I could say prosperous during the pandemic cycle before, due to large adoption and demand in this sector lah. Okay, since that when the pandemic happens, we have a significant rise in terms of adoption in IoT lah, Internet of Things suddenly, and this benefit a lot of the company in this sector, in technology sector. So you can see that if you happen to get into the technology sector before the pandemics, you probably riding on some of handsome profit lah at that time. Okay, but but after the normalization after the pandemic cycles, and most country opening back, and we try to normalize our life after pandemics. And you can see that I mean, in terms of revenue, there's some impact on the revenue, and also since that as a growth stock or growth sector, normally they are heavy on term of financing, because they need financing to keep on growing. So when there's a jump of increase of interest rate by certain countries, then you can see that some of them have been impacted by this kind of exercise. Okay. For this fund, I would say that you can expect to gain return through capital gain due to large exposure in technology, because technology will support more growth in terms of your portfolio more, and towards towards an income distribution lah. Okay, so if you target to grow your portfolio, the technology sector is one of that, but you must understand there's also risk associated with this kind of sector. So now, based on this 4I ETF by the IVCAP measurement Sdn Bhd, you can see that they are using the same Shariah advisor known as Amani Advisor Sdn Bhd, right? Okay, the fifth Islamic Shariah compliant ETF is the Malaysia first Shariah compliant commodity ETF. It was launched in 2017. The objective of this fund is to aim for the return performance that closely track the performance of gold price. Okay, the manager of this fund is formerly known as Afin Huang Asset Management. Now they are known as AHAM Asset Management Berhad. Okay, before this, the first four is IVCAP. Now we have a new management company lah. So the benchmark used in this case is for this kind of ETF is the London Bullion Market Association, LBMA gold price. So by investing in this fund, the investor will be able to invest in physical gold without need of storing and also insuring the gold bullion. Okay, this could be an alternative lah product for investor who seek to hedge their profits or capital against uncertainty in the market, but prefer a better liquidity management. Okay, so some investor prefer gold and silver as one of the hedge instrument when there's an uncertainty happen in the market. So traditionally they have to buy the physical gold, physical silver bullions, and they need to rent storage for them to keep storing all these bullion and bars. But you can also use this kind of product if you prefer to involve in commodity lah. Okay, however, there are specific risks associated with since that it related to gold commodity lah. Okay, which are one of them is that the reliance on the gold provider from time to time. Okay, minimum redemption size that investor need to fulfill. So you can ask for the physical gold after you buy this ETF, but there's a minimum redemption size that you need to fulfill lah before you can ask for the physical gold. And also the fluctuation of gold price due to demand and supply factors. Okay, so if I'm not mistaken, one of the assayer in Asia under London Bullion Market Association, one of them is in Indonesia, known as Logam Mulia. Okay, I don't think we have assayer in Malaysia right now under registered under LBMA, but in South Asia, one of them is in Indonesia, known as Logam Mulia. Okay, the final Islamic ETF is the newest edition. Okay, launched in 2021. Is the VP-DJ Shariah China A-Shares 100. Okay, the benchmark used for this ETF is Dow Jones Islamic Market China A-Shares 100 Index. So the manager is Value Partners Asset Management Malaysia Siang Berhad. So this is the third management company for Islamic Shariah compliant ETF. So VP is the Value Partners, DJ is the Dow Jones. Okay. So what is China A shares? Okay. A shares are shares of companies based in mainland China that are listed on either the Shanghai or Shenzhen Stock Exchange. Okay. Historically, these China A shares were only available for purchase by mainland citizens due to China restriction on foreign investment. However, since, if I'm not mistaken, since 2003, select foreign institutions have been able, foreign institutions have been able to purchase these shares through the qualified foreign institutional investor. They call it as QFII system. So using this license, the foreign investor can buy and sell on mainland China stock exchange. Okay, A share also known as those domestic shares because they use the Chinese RMB for valuation. Now, from the top 10 holdings, we can see most of the companies are major or leading companies in their sectors. Okay, for example, Contemporary Empress Technology Company Limited. So is the largest and most advanced electrical vehicle EV battery provider globally and is a supplier to many top-tier automakers such as Tesla and Toyota. The other one is BYD Company Limited, one of the top EV manufacturers in China. Then China Yangtze Power Company Limited, so the largest hydropower company in China. Shenzhen Midray Biomedical Electronics Company Limited, among the largest and best-known medical equipment companies. Longji Green Energy Technologies Company Limited, supply solar energy product both locally and abroad, and also as one of the largest world-leading solar equipment producer. Then what we have here, Foshan Haitian Flavoring and Food Company Limited, one of the best-selling soy sauce in China, and also is one of the largest manufacturers of seasoning in the country. Okay, and then so on and so forth. We can read from the fact sheet. Okay, so most of them are major or leading companies in their sectors Okay. So with this information of this IETF, so investor, if you want to get involved in this kind of ETF, you must be aware on some specific risks associated with this product. One of them is that risk investing in People's Republic of China. Okay, so China recently, uplift their zero policy, zero COVID policy, and then but you remember that before pandemic, they are still in trade war with US. Okay, so there's some risk still available there even though they start opening up their economy. And also the risk also involve Stock Connect, which is the QFII system that I mentioned earlier. Country risk and the China renminbi currency risk, concentration risk, because you can see that most of the company is the largest cap company, and also the minimum redemption size mentioned by the management company Okay. So as a summary for all IETF that currently available for investor in Bursa Malaysia, we can say that most of them are equity based. We currently don't have yet Islamic or IETF for fixed income, but we have one IETF involved in alternative investments such as commodity, which is good. So far we have 3 management companies for all these IETF, which most of them under IVCAP Management Siang Berhad. Most of them, most of the currency used to do the transaction is in Malaysian ringgit, only one in US dollar. Even though if you go to the website of Trade Plus Shariah Go Tracker, they said the currency used is Malaysian ringgit, but when I check in the Bursa, it's still in Malaysian ringgit. So every ETF here has its own benchmark or tracking index. Therefore, we can compare the performance from one ETF to another lah. Okay, it won't be an apple to apple comparison. So do not ask whether which one is the best compared to the other one, because most of them are using different kind of benchmark, and they have different investment style or target, or also exposure in terms of geographical and also sectors. Okay, based on this world map, the geographical exposure of IETF in Malaysia, I can say it covers equities in Asia region. We have two IETF for local Malaysia exposure, one IETF on regional level, which is in Southeast Asia, and one in mainland China. So in terms of other region in the world, we have one IETF focused on US market, but we have yet to have IETF that focus on a global or world, Europe, Japan, Asia excluding Japan, or Asia Pacific excluding Japan. Okay, so I mean to say that there's a Shariah compliant ETF there in other stock exchange, but not in Malaysia lah. So probably if this kind of situation, if the investor would like to have a diversified passive investing portfolio, let's say you want to create a passive portfolio using all Shariah compliant ETF. Okay, so they will need to open a cross-border trading account lah, whether with local broker or global reg account with asset management company to do so. So by using this type of accounts, they can combine the IETF in Bursa and other Shariah compliant ETF focus on equities. Some of the Shariah compliant available in, if not mistaken, in US market. They also want Shariah compliant focus on fixed income, and also commodity. There's also Shariah compliant index. Sorry, Shariah compliant ETF focus on REITs. But all of them, most of them, you can find it in the foreign stock exchange lah, right? Okay, for the advantages and benefit of investing in IETF is that you straight away get an instant diversification when you invest in ETF. The reason is because ETF consists, like I mentioned in the earlier of this presentation and sharing, the reason is because it consists of a basket of securities. So you will straight away have an exposure to various market indices, sectors, countries, or geographic regions and investment style. So this is an advantage for retail investor who want to start small due to limited capital. Okay, so be honest lah, if for the retail investor, let's say you have below than 50,000 capital, maybe because of your risk profile tolerance, you most likely inclined to invest in big or large cap company. So it's quite challenging for you to create a portfolio focus on largest cap. So one of the way you can do it using IETF lah. Okay, so we know that IETF is like unit trust, but for a unit trust, the management companies are allowed to charge 3 type of fees. Okay, this is a traditional unit trust. Okay, the first fee is the initial service charge. The second is the repurchase fee, and the third one is the management expenses. Okay, so when you buy a traditional unit trust, you will have to pay first for the initial service charge, which is called as the front end. And when you sell back your unit trust to the unit trust management company, you will have to pay another charge, which is the repurchase fee. We call it as a back end. So however, when trading ETF units, investors are charged with brokerage fees, similar like securities trading. Okay, because ETF is passively managed, so the management expense ratio is relatively low compared to actively managed unit trust fund, including fixed income fund. You know lah, when you traditional unit trust fund, the equity funds will be slightly have the highest management expenses compared to the fixed income funds. But For ETF, because of the investing style of the passively managed, so the management expense ratio is sometimes relatively compared lah to other, including in fixed income funds. Okay, like I mentioned before, you can purchase or sell ETF units in secondary market. So the execution of trades are performed on a real-time basis during the market hours in Bursa. So the investor can use stock order. If you're familiar with stock trading, you know there's a couple of stock order. So you can also use stock orders such as limit order, market orders when trading this ETF. Okay, this feature allows investor a trading flexibility when compared to investing in a normal unit trust. Okay, in terms of the pricing, the management company is responsible for the disclosure of the we call as a indicative optimum portfolio value, or IOPV. Okay, so this IOPV is an estimated net asset value, or NAV, of the portfolio securities of the funds on a daily basis. So the management need to disclose this IOPV on daily basis. Okay, so the retail investor can go to Bursa website and refer to this IOPV. Okay, I found it it's better to use Bursa Marketplace website when you want to refer this kind of IOPV. So let's say you want to refer IOPV for all these 6 ETF, you can go to Bursa Marketplace to get the reference on this IOPV. Okay, so once you go to this Bursa website, you can use it to compare against traded price of the ETF units. Okay, so for you to determine whether they are over or under price. So the IOPV as an indicator. So you compare it against the bid and ask price. You can know whether it's the over or under price. Okay, risk in ETF investment. So in any investment product, there is always risk involved. Okay, you cannot avoid it, but you can try to manage the exposure. So investing in ETF also expose the investor to various types of risk, including first is number one, the market risk. So investor are exposed to market risk due to basket of security, which form the components of the target index. So for ETF, the market is usually the broad market risk of a diversified portfolio. Number two is the asset class or sector risk. So an ETF can be organized to track specific market segments. So therefore, the investor may encounter investment returns that are too concentrated on a particular asset class or sector. So we have the example just now. You can see that some of them focus too much on larger cap. Some of them probably inclined towards one of the sector. So it is likely to be influenced by a single economic, market, or political event. Okay. Number three is the trading risk. So this trading risk may arise when the management company face some difficulties to invest in the basket of securities identified in an ETF. So the trading risk also happens when the stock exchange is illiquid. This makes the bid and ask spread can be large and contribute to the trading risk. Okay. Finally, is the tracking error risk. So this risk happens when the ETF fail to track or mirror the performance of its benchmark index. Okay. It also possible to happen when the management company decide to invest in different weightings from those of the target index, or invest in comparable security index of those identified. Let's say they want to mirror some index as a benchmark. There's some weightage in terms of security or sector involved. Then suddenly they decide they slightly not following that kind of weightage. So there could be some tracking error risk arise from that. Okay, so the table here provides the comparison of ETF with an open-ended unit trust fund. So in terms of creation and redemption of units, ETF done in kind, okay, whereas for unit trusts are done in cash. As for the trading channels, ETF are listed and traded on an exchange. stock exchange. Investor can invest in ETF using the same trading platform as the security markets. So you can use the same trading account to buy the stock and also to buy ETF. So in the other hand, unit trust funds are not listed on exchange. So buying and selling are done through appointed distributors. Okay. So for pricing transparency, the net asset value of ETF is calculated at the market close. However, the management company must calculate the IOPV on a regular basis within a day and share the value on a real-time or near real-time basis. Usually, the IOPV is updated at 50-second intervals. Okay. As for unit trust fund, forward price is applied and transactor price is only known at the end of the trading day. Okay. Okay, now we compare ETF with the equity securities. Okay, both are traded in the same platform, which is on stock exchange. So in Malaysia, ETF are also traded in bought lots. Okay, you need to buy units and lots, and the settlement day is on the existing T+3 basis. Okay. So investor will have to pay also brokerage fees, clearing fees, and stamp duties when trading ETF through dealers representative. However, the differences between these two instruments are for underlying investment, ETF units are backed by a basket of security representing a particular index, whereas for equity securities represent a direct ownership of a particular individual company. So that's why for ETF, in terms of dividend, so-called a cash flow component, they call it as an income distribution, and is under discretion of the management of the company. But for the when you invest directly with the stock, you become you have a portion of ownership of the particular individual company. So whenever the company declares certain dividend, you will get the same percentage of the dividend lah. Okay. But for equity security, there no need for market maker, but liquidity of ETF is enhanced with the presence of market makers. Okay, so I think I've come to my final presentation slide. So I pass back again to Shane to conduct the session. Thank you.
Thank you so much, Zul, for doing this passive investing with Shariah compliant ETF with us today. So I think I learned a lot about Shariah compliant ETF. If any questions to ask our speaker today, you may write them in the Q&A box so we can address them accordingly. So write your questions on the Q&A box if you want to ask our speaker any question. All right, so the first question on my panel is that what is the management fee charge in general for the Shariah compliant ETF?
Okay, thanks. So for management fee, if you can see that I can share a couple of from the fact sheet. I mean, it's not directly charged to you, but it's already embedded in the net asset value. Okay, so probably you can see that it's around 0.4% for these US Titans. Islamic dividend here is 0.65%. Most of in the range of 0.4 to 0.65 lah. Okay, that's the management fee lah. So, but you are not paying them directly. It's already embedded in the NAV. So you just buying the unit straight away from based on us and bid price in the stock exchange codes.
Okay, so it means that every day the net asset value will reflect the net asset value after deducting the management fee on a daily basis. Yeah. So you're paying a really tiny fraction of management fee every single day. So for the next question by Suntari Lingam, is the dividends taxable?
Okay, for ETF, similar with income distribution. I mean, we call it income distribution, like it's not taxable. Okay, you will receive directly into your account lah. Similar like dividend received from the when you're buying direct shares.
Yep. The next question is by Nur Shafika. How should I treat the Shariah non-compliant ETF that I currently hold?
Okay.
And also the return from the disposal of this Shariah non-compliance ETF.
Okay. So basically, this I mean, I'm not in the authority to answer it, but there's a guidelines provided by the Shariah Advisory Council. They have given some guidelines for us for this kind of situations. Let's say if you whenever you happen to buy a Shariah compliant and then suddenly become Shariah non-compliance, let's say if it become non-compliance, dividend received from during the period, you cannot keep it, you need to do cleansing. Then if you want to sell it, if you are currently at a loss, you are allowed to hold it until you get the break even. So and then if you happen to have I mean profit during the non-compliance period, you cannot use you cannot keep it. You need to do also the cleanings. Okay, but you can read in the guideline lah, given by the Shariah Advisory Council. But I just give a high level information of that lah.
Okay. Thanks, Zul. The next question is by Adam. What is the best strategies in investing in exchange traded funds?
Okay. In terms of strategy, the first thing that you need to understand is that what is your risk profile tolerance actually? Okay. So let's say you need to have your investment plan first. From there, you need to create your, we call as the, from my practical side, we call as the investment policy statement lah. Okay. And then for since that ETF is the passively managed, so number one is that you don't have to do any market timings. Okay. I mean, nobody can do the market timings. So you just need to I mean, decide whether this kind of ETF, I mean, complies to or relate with your risk tolerance, and then whether this kind of ETF you want to have exposure in terms of risk management. Probably you want to have some exposure in terms of other markets, so that whenever our local market is not so convincing, you can still making profit in other markets. And in terms of capital deployment, I would say that you still need to have to do some, we call as a dollar cost averaging, because put it the way that since that it's not timing the market, it just follow all the benchmark or the index, and okay, sometimes it goes down, sometimes it goes up. So probably one of the best is using the DCA lah, right?
Okay, dollar cost averaging.
Okay.
Okay, so the follow-up question by No Shafika is, how should I treat the non-compliance investment that I currently hold?
Like I mentioned before, we need to determine the period of when you acquire that stocks lah. Okay, so you need to measure. So every year they will release 2 times, once in May and once in November, whether this kind of stock become Shariah compliant or Shariah non-compliant. So you need to measure from the time, go back to your transaction history. You need to measure when is the time that you purchase the stock, whether it's for under certain period or timeline of non-compliance or compliance. So from there you can decide lah whether you want to, I mean, certain profit you can keep and certain profit you cannot keep.
Okay. So the next question is, can we build a global portfolio with Shariah compliant ETF that consists of equities, fixed income? You know, is there a way?
Yeah. So Mr. Lim here asked, yes, we can do it. I mean, a combination of Shariah compliant ETF. But like I mentioned before, if you want to use everything in IETF, you cannot do so. That means you need to open a cross-border account. You can find another Shariah compliant ETF either in US stock exchange and also in London stock exchange. And from I think there's a couple of Shariah compliant index compliant ETF also available in US stock exchange, focus on equities, fixed income, which is in Sukuk lah, and also REITs and also commodity. Other things that you can use REIT account lah. For me, I'm using REIT account lah to buy all these global Shariah compliant ETF in other country.
Yeah, it seems that we have ETF that give us exposure to Southeast Asia, America, China, and also commodity lah, except don't have a fixed income. I think we have a fixed income ETF that's listed, but that's not non-Shariah compliant now.
Yeah, correct.
Okay, but for the IETF, we have US, China, and gold at the moment, and also Southeast Asia. The next question is by Ahmad Shamil. Is technical analysis required for the ETF investment?
Oh, from my experience, there is no need for that because it's a simple investing approach. You just need to focus on asset allocation or risk management only. Okay, you don't need to do any technical analysis to timing when to buy the ETF units or what. So one of the simplest way is that you go to the Bursa marketplace. You go to all these 6 ETF, look after the IOPV, and then compare it against what the trading price there, bid and ask. Okay, is whether it's a overvalue or undervalue. So then after that, you use DCA lah to deploy your capital.
Okay. So Zul, under what circumstances should we sell or dispose of our ETF?
For me, from my opinion is that whenever you construct a portfolio, you have certain weightage in the portfolio. So let's say this is example lah. Let's say 30% in US market, 20% in local market, either focus on large cap or combination of all these 3 large, middle, and small cap. 20% in Southeast Asia, maybe another 20% in China. So whenever things that I think the one of the adoption strategy that you can use is that whenever there's the weightage is moving away from the original state, so you need to realign it back to the original state. Then that's the decision when you can start selling your ETF and move to another ETF, or otherwise you can keep it under instruments first, waiting for another opportunity lah.
All right. So how frequent can we receive the dividends from the ETFs?
It depends on the fund that you purchase lah. Okay, some of them give an annual income distribution, some of them give semi-annually, but maybe some of them if they focus on term of growth, then there's no dividend declared lah. But all of these are under discretion of the management company.
Yeah, like for example, Trade Plus Gold ETF may not give you a dividend.
Yeah, no dividend. Yeah.
Yeah, so it depends on them. So do we receive the cash in dividend or is increment in the net NAV?
For this ETF, you receive the cash.
In our CDS account.
Yeah.
In our trading account. All right. Now, I noticed that there are some ETF that are foreign based. I mean, the underlying is the constituent stocks are foreign based. For example, the American ETF, right? How does the ETF that tracks the US market move in the market when the American market is not open yet?
If I'm not mistaken, if during, our trading day, I seldomly saw any movement of that lah. But probably in the night, we can see some changes there. But if you're referring to the ETF that mentioned that track the US market, normally I'm not very sure about that. But I have experience buying US ETF directly from the US stock exchange. Normally we can see that the tracking quite similar or mirror in terms of the benchmark during their day trading lah, in terms of that.
Okay, thank you so much, Zul. So if you have any more questions to ask our speaker today, please write them in the Q&A box. So what are some pointers that you can give to us today to help us to become a better ETF investor?
Okay, I can say that the first thing that you need to do is that if you don't have any advisor or financial planner working with you, you should be start engage with one of them. This is to ensure that you can get second opinion for you to build your own investment portfolio. Because normally when you deal with this professional, normally they come up with so-called of investment plan for you. But in this case of my practice, normally I will help my client to build we call as a investment policy statement lah. So investment policy statement is like a manifesto that we're going to refer from time to time on the objective of our investment and what is our risk tolerance, how much capital that we're going to use for this kind of investment, either we are using our investable asset or are we using so-called of inheritance asset, something like that. And then from there we can work closely on how to use this kind of ETF to build your portfolio. Probably you will know whether because due to limitation of a product or Shariah compliant currently, probably this is not going to be your the core portfolio. It could be your satellite portfolio. So the core portfolio will be coming from maybe another instruments or Shariah compliant instrument. And then from there you can do so-called of continuous monitoring. But most of the time, I think you should emphasize in terms of asset allocation and also portfolio rebalancing to make sure that there's always a risk management aspect being used in your investment. So otherwise, it just makes you more disciplined. So you know that when it's time to take profit, you need to take profit because you have some guidance. Okay, otherwise you're going. I remember one of the client that I asked him to do portfolio rebalancing. He didn't follow it, so he missed the opportunity to keep the profits. So that's kind of things that I think you should consider lah before you come into any investment. So get your first investment plan first. Then after that, you can find any instrument that suit with your profile.
All right. Thanks, Zul. The next question is by Ashar. Are there any ETF with exposure to currency as an asset class?
No, at the moment we don't have it. Even in the global, I don't think we have it exposure to currency as an asset class. Normally, the asset class will be equities, fixed income, commodity, or REITs. So the reason why is that commodity and REITs they try to have a non-correlation. So let's say if equities and fixed income is not performing, so maybe you can get some profit from REITs market or also commodity. So most of the time when they produce a product, they try to study whether this kind of asset class will be have a normal correlation or a different correlation, so that they can manage the risk better lah. But in terms of currency, I don't think we have it.
Yep. yeah, I think currency is more like a relative strength between two countries' economies. Yeah, so it is not easy to do that. So if I may add on some minor correction to the questions that ask about the US base, sorry, the ETF that tracks the US underlying, is that the ETF that tracks the US underlying, they are listed on Bursa Malaysia. They actually tracks the S&P futures, I mean the futures, because the American futures market move like almost 24 hours a day. So even though the equities market is closed, the futures market is still open. So the ETF tracks the American futures market that is still moving during the Asian time zone. Yep. So the next question would be, how would an investor hedge the foreign currency exposure if they invest in ETF with foreign stocks?
How would investor in foreign currency exposure if they probably you need to do it in their base currency lah. That's one of the thing. Okay, in terms of that, if let's say you want to buy the ETF that in different currency, there's a currency risk associated there. Most of the thing, I think that one of the ways is that you can buy the ETF using the base currency itself lah. Probably if the ETF is launched in US, you use US dollar currency or if the ETF are listed in the London, you probably can consider using Great Britain. But of course, you need to understand the currency risk also lah. Is there a good buy? Is there should be, for the time being, do you need to buy in the Great Britain now or what? Something like that lah. Okay.
All right. So looks like we have addressed all questions on my panel today. So of course, if you have more questions, you can keep it coming. So in the meantime, let me go to my slide. Oh yes, there's one more question coming. Oh no, just thanks so much, Zhu, for the sharing. Tuan Zhu, okay, it's from Ashra. So with that, we would like to conclude the session today. Thank you so much, Zhu, for staying out with us until almost 10 o'clock to conduct this session, Passive Investing with Shariah Compliant ETF. I'm sure all of you here have learned enormous value from Zhu today about Shariah Compliant ETF. So we want to thank Zhu for spending his time here with us today.
All right, thanks,